Welcome to the Maryland Mortgage Rates Weekly Mortgage Market Update for the week of August 26, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Last week was a crazy roller coaster ride in the mortgage bond market. If you look at the bond chart on the screen, you can see the previous week mortgage bonds were dropping. The whole week, ended the week a lot worse than they started, so rates had surged higher the previous week. Continued that this Monday. You can see on the bond chart, mortgage-backed securities sold off. Rates dropped, set a new all-time record low for the bond, which is all-time record high for the rates on Monday. But then we had a good recovery on Tuesday, jumped higher. And then Wednesday, after the Fed minutes, everything sold off, bond stocks, everything. So tanked it again. Thursday, after the release of initial jobless claims, which came out worse than expected, the market kind of recovered a little bit. And then Friday, the market surged higher, closed 63 basis points higher than where it started. And we were right back where we ended the previous Friday. So that was a crazy ride for mortgage rates. We're going to recommend floating your Maryland mortgage rate to start the week, as we're going to see if we can build on this momentum from Friday. Now, if we dig into what news came out last week, the first thing in housing, we saw existing home sales come out last week. They increased by 6.5% from July of 2013 to June. From June 2013 to July. And they increased up to 5.39 million units. That's a 17.2% increase from July of last year to July of 2013. The Federal Housing Finance Agency also reported last week that home prices rose by 7.7% from June of 12 to June of 13. And they also reported an increase of 0.7% from May to June of this year. Now, the big disappointing report came on Friday. That's what helped the bond market jump up. New home sales declined by nearly 14% from June to July. Lowest level in 9 months. Media was going crazy, but we predicted this. This is what we were expecting. When mortgage rates began to rise in May into June, it pushed buyers' timelines up. So the people that were normally going to wait and buy in July were jumping off in May and June. So when July rolled around, a lot of those people had already bought that normally would have bought in July. And we saw that with mortgage applications surging in May and June and then dropping in July. So we knew home sales were going to drop. Basically, they fell to 394,000 units annualized. That's below the 485 expected. And they revised June lower from 497 to 455. We're basically, again, what happened? Rise in home loan rates, bunch of people jumping off the fence. We expected that. Now we're looking for a rebound in August. Why? Mortgage purchase applications are up again. And the builder sentiment is up. New home sale starts, again, was up. So we're looking at a rebound in new home sales in August. We predicted this in July, so not a big deal. In economic news, the Federal Reserve released their minutes on Wednesday. That's what threw the market in a tizzy. Everything sold off. The reason why? There's no clear direction from the Feds. They were expecting them to tell us, are you going to start tapering your asset purchase program at your September 18th meeting, or are you going to wait till 2014? They didn't say anything. I guess they thought they didn't want to spook the market, and they did anyway by not saying anything. Now, we're predicting that they're going to actually announce tapering at the September 18th meeting. They're probably going to start tapering buying treasuries, not mortgage bonds, so it won't have a direct effect on the bond market, the mortgage bond market. And they're also going to continue reinvesting the dividends and the payoffs from their current mortgage portfolio. So we're predicting it won't have a huge impact on mortgage rates, because as they start tapering back their bond buying program, the supply coming to the market is dropped, because we've lost all these refinanced mortgage applications because the rates have jumped up. So we think it'll be an offset, and it'll probably be a neutral event. But we'll see as that comes. We'll keep you updated. Big news just came out. HUD announced a new FHA loan program called the Back to Work program for people trying to buy homes after a significant economic event. Those big events are short sale foreclosures or bankruptcies. If you had one of those events and it was a direct result of an extenuating circumstance from a loss of job or a drop in income by at least 20%, your waiting periods have dropped to 12 months. Typically, if you had one of those events, you're looking 2 to 3 year wait period. Now it's only 12 months if you reestablish your credit. We've got all this information in a blog post on our blog, which is marylandmortgages.tv. Go there, check it out, get all the specifics, how you qualify, what you need to do. If you have questions on the program or you want to apply for it, give us a call in the office, 410-412-3319, or you can apply online, www.primaryresidentialmortgage.info. So we'll take care of you on that. Now, in the local news, the next free first-time homebuyer seminar in Towson, Towson, Maryland, on Delaney Road at the Baltimore Sheraton North Hotel from 10 a.m. to noon. That is Saturday, September 14th. You can register for that event by giving us a call in the office, 410-412-3319, or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.